all eyes today on the released RBA minutes because last time they had that indication there was a shift back from the bank away from the assumption many markets had that there would be a rate cut next. Is there going to be a shift back towards that bias? Given some of the recent economic indicators, joining me, Chief Investment Officer at the Motley Fool, Scott Phillips, who knows where this is headed. I'm sure you like a bold prediction, Scott. It will be interesting, won't it? Because the RBA has been really cautious, but when we're sort of passing the minutes carefully, previously there was a pretty clear indication that the bias was towards a cut next. And then suddenly in the last minutes that sort of changed. Do we think that there'll be a change back? And then, of course, maybe some reaction to the federal budget?
Tom, g'day. Yeah, that's the real challenge. There's so much has happened since the last rates, even meeting, let alone the last decision back in November, or last move, I should say, in rates anyway. We've seen, obviously, the economy really, really weak. GDP growing only 0.2%, retail sales going backwards. We're hearing from plenty of retailers, including yesterday, Michael Hill Jewellers saying, look, sales are still in decline. The flip side, as you mentioned, though, is that inflation number was the surprise, sticking at 3.6%. Unwanted high inflation, obviously, we know that was the thing that the RBA kind of seemed to have sat up and said, oops, we could be having to do something different here. And Warren Hogan, of course, the economist, saying, you know what, we might have 2 or 3 rate rises this year. So that combination is really what the market started to think. The bond market's still not betting on a rise, but also not betting on a fall until mid next year at this point. And then add to that the unemployment numbers that jumped last week. Now, if that sounds like a bit of a alphabet soup of numbers and acronyms, it absolutely is, because that's what the RBA has got to deal with. You're right. They absolutely were on a path to reducing rates until they said last time that inflation wasn't falling as quickly as they had expected. Now, what the RBA has said, Michelle Bullock, in the past is, whatever inflation is dropping roughly in line with their expectations, the so-called glide path back down to that 2 to 3% target band. Yeah. Whatever that was on a good path, a consistent path, they were happy to let it go. If it sits above that glide path and they do feel like they need to do something, that's what the market worried about. So you're right, though, the budget this last week, the questions about what that does, I will say I don't expect it to be one for the RBA. They've got, obviously $3.5 billion on energy. We know about that. We already knew about the tax cuts. There wasn't a whole heap, honestly, mate, other than that, and a welcome small surplus. So be fascinating to see what they do, how they consider the energy rebate as well, because on one hand, it's going to bring down reported inflation, I should say. But of course, it doesn't actually change the underlying dynamics. It just adds a government subsidy to bring that reported number down.
Yeah, so headline, if this comes to pass, according to the government, headline comes down. We know energy comes down. The question is, do other elements, does retail creep up because people use the money? But even if headline comes down in that scenario, as you say, and I can feel people going, don't get too wonky, but this trimmed mean figure, basically let's call it real inflation, stripping out all the stuff that goes up and down. That's what the RBA looks at. In other words, it doesn't get fooled by, a mechanical reduction in inflation because there's a rebate on your energy bill. It really wants to know, is there heat still on prices? And if there is, it won't cut rates. So the Treasurer could be right and a headline inflation comes down, but there's still no rate cut because the RBA says that's not what we care about.
Yeah, you nailed it, mate. That's exactly what's going on, because they're not going on the number, right? The reported number from the ABS is interesting. What they're really looking for is, what does that number mean? If we pick it apart, they're clever people. They're not just blindly taking the ABS number and putting it into a spreadsheet and saying, well, it's now X, therefore I have to do Y on rates. What they've always been concerned about, and they were too late to move, we all know that now, was that imported inflation would become endemic domestic inflation. People still say to me every now and again, but it wasn't caused by that, it was caused by this and caused by that. That's absolutely true. The problem is those things are no longer the cause. We now have endemic domestic inflation, where my costs are your prices are my costs, and around we go. That's why inflation is so
and that's where you get wages feeding in. As soon as you have expectation. If you think they're going up, you go, hang on, I want a 4% wage rise, then prices go up, and this is the concern, right? So
now the good news about energy,
I just feel as though the RBA will be conservative. If they're going to make an error, they want to make an error that inflation is lower than it should be, or maybe we get a hard landing. I mean, it sounds brutal. I just think that's where they'll end up.
And that's the risk, right? Because, they know they have to do something about this. While we worry about interest rates, of course, we worry about recession, we should be. The reality is central banks around the world have said a recession matters. Inflation matters far more. And so there's been this general view of oh, the RBA won't do this because it might cause a recession. That's possible. I think more possible, more likely is I won't do this because inflation might keep going. In other words, if they have to choose between the two, it's far from sure they will choose to avoid a recession at the cost of higher inflation. I think, as you say, they're more likely to risk a recession to make sure inflation does come down.
Yeah. And recessions can end in a few months. Inflation can be there for years. All right, Scott Phillips, thank you.